Hello traders, it's Samurai Trader here. Welcome to session 91, how to day trade any market, the $1,000 a day challenge. Now in today's session I traded for around, I think it was around an hour, for around $1,500 net. What I'm going to do actually is run you through the live trades. That is, I recorded the session, I just hit pause in between the trades. So what we'll do is, once I go through a few slides here, we'll then go through step by step the trades that I took, and I'll explain to you the logic. And one trade, look, was perhaps a bit dicey. It was a loss, but look, I'll talk about that when we get to the charts. And traders, no matter which market you trade, whether it be futures, forex, or stocks, you apply the exact same rules to that market. We do know that there's a risk in trading. Don't trade with money that you can't afford to lose. And one of the great things about trading today is, of course, you can stay on the simulator until you're ready to actually go live. All right, very quick advertisement: if you haven't downloaded my ebook, The Truth About Day Trading, you can do that in the description link below. Please make sure you give a big tick that you like my video once I go through, because as you'll see, I give away a lot. That is, I give you massive value. I show you exactly how I trade. And even better still, become a member. For $197, you get all of my indicators. You get there's over 35 PowerPoints. There's literally hundreds of hours of instruction. The great thing is, though, you don't need to focus on all of my setups. So where I've got here 15 plus setups is really less than a handful that you'll probably be looking for each day, but they're all rules based and pattern based. And on top of that, I have a bonus whereby you can also attend 1 month free of my live coaching sessions. So every Tuesday and Wednesday, 6 p.m. to 8 p.m., you can log in, where I'm discussing everything from trading psychology through to money management, through to, from the right hand side of the chart, explaining step by step exactly what you're looking for. All of this for only $197. There is nothing else like this out there. And if after the first month you like it, drop me an email and you can sign up and continue thereon after. Now this is important. I do mention this to those that are perhaps that are brand new to trading. In today's session, you'll see that I'm trading both with the trend. I'm taking one or two counter trend trades. And so one of the critical ingredients as a new trader, you really want to focus on trend trading. And as a new trader, I have what I call the Goldilocks rule: not too hard, not too easy, just right. And I tend to find that, just really having just a couple of setups initially is the way to go. In fact, you could specialize just in trading with the trend, and I'll point those out to you as we get to the charts, and you'll see exactly what I mean. This is not rocket science, traders. It's about following a definite plan, following your rules, and looking for the patterns. Okay, this is a game changer for 98% of the population, and I know I bring this up every video because the shame of it is most day traders fail because they really don't know where to start. They don't understand the money management and really what they should be doing initially. And unfortunately, so many of them set this big grand goal which is just not achievable for a new trader. But I'll tell you what is, $100 to $300 a day is extremely achievable, and I'm going to show you how to do that today. So what would $5,000 a week mean to you and your family? It'd be probably a game changer. It would change your life. Well, I'm going to show you how to do that realistically. Now I recommend to brand new traders you focus on $100 a day initially, then you go to $150, you go to $250, because then you're building both confidence and competence. And I think in today's live session will be a really good example just to explain that to you as we go along. So what I executed here was, and if I remember correctly, no, that was the one before. It's all right, I was thinking of another video. So if I go to the second page, so I'm going to walk you through the live trades here so you can see the trades I've taken on the screen, but in fact I was recording at the same time. So I'm going to explain each setup. So in total there was 8 trades, 1 loss, 1 break even, 6 wins. in 55 minutes. So when we get to the charts in a moment, well, actually in this case to the recording, I'll explain this. But what I do want to briefly cover is this. Let's quickly talk about money management. Let's talk about the hard stuff. I want you to remember, traders, that winning traders are willing to do the things that losing traders won't do. For an example, most won't listen to the advice I give when it comes to proper money management. They won't listen to as far as following your stop loss rules, etc. You'll be amazed, and they wonder why they fail time and time again. Now, to trade this market, this particular time frame, so I love trading around the midnight through to 3 a.m. Central Standard Time. Now, that's not going to suit most of you. Of course, most of my clients are in the US. However, that suits me down under. That's late afternoon, early evening for me. And usually I'm over and done with within 20 minutes to an hour. I've finished, I've hit my target. Now, what it comes down to, traders, is there, and sorry, my daughter is just using my office printer. I can just hear it going. I'm just going to pause this for a moment. If you can hear that, you'll have to excuse me a sec. Okay, that threw me out for a sec. Okay, but the printer's now stopped. So it comes down to that if you want to trade the 4-tick Renko, which I'm showing you today, and let me also mention, it doesn't matter whether you want to use tick charts, time-based charts, Renko, range, Akinashi, the setups work on all markets and all time frames. I love training traders how to use, particularly newer traders, how to use Renko, because it makes their trading decisions so much easier. Now, to trade this time frame, you need $4,000 to stay within our 2% money management rule. You can get away with as little as $3,000 if you have a tighter stop loss, which, if I remember when we get to the live charts, I'll show you and then explain how you could do it and have a smaller account. But even if you got the 4 to 6 to 8,000, however much you've got, you can start now on the micros, and you could get away with 300. But if you start on the 400 a day here, the $400 account, trading a micro, which is 10% of the large account, within 12 weeks you're now up to $4,000, and then you can roll over and start trading the big contract. Now, once you switch over, you've now got 4,000. You're going for 10 times that amount. You're going for 200 a day. Okay, and in 12 weeks there, you've got an income there of $10,000 a week, and legally, I've got to say potentially. Now, if you go back and watch my videos, time after time, I'm hitting my targets. Now, yes, do I have losses? Absolutely. Now I'm going to show you how to avoid some of those losses too, or how to increase the probabilities of your trading. Now, one thing I did want to show you just here is, where is that little handout? Is very important. How many trades a day would you need to undertake to hit a target of $200 a day? Now, I'm a scalper, which means I have usually a small fixed target. Get in, get out, get paid. That's my members hear it every day. I've got a live trading room as well. They hear me say this, it's like a mantra. Get in, get out, get paid. Okay, I love to have a cash register ring. So if you're going for 4-step scalps, okay, and I'll show you what those are in the recording, you need 4 net trades a day. Or 7 steps, you can get away with around 3 to 4 trades a day, and you've hit your target, and that is after commissions. Now, what I have is a set of tools which members use, and for an example, if you go for just $250 a day, and in today's video you'll see I hit $300 a day quite easily within an hour, you can see where you are there within week 10. Okay, potential income there of $13,000, and most importantly, look at your capital now. It's at 51,000. And if you're not familiar with my compound calculator, you only start trading an additional contract each time you get another 4,000 in your account. I've seen some garbage on the internet where it shows you can do this in a matter of weeks. It's just BS, traders. Okay, you want to basically be using the market's money, because that way you're building both confidence and competence at the same time. So 250 to 300 a day is extremely realistic. Now that's after hours. That's trading what we call the Globex session. Now you go and start trading during the New York session, you know, $600-700 a day is achievable. However, you also got a larger account size requirement and the market is a lot faster. Okay, so there's a couple of challenges trading the New York session. In fact, the first 15 to 30 minutes of the New York Open are what we call the killing fields. That is where traders can really get hammered in that time. Now if we looked at this compound table here, starting off with just $20 a day going to 200 when you roll over, this is taking you only 24 weeks. So based upon 50 cents a tick, it's taking you 12 weeks. So this is where potentially you can be in 24 weeks. Now hand on heart, I do have to say this, add another 10 weeks to that, and the reason being, I recommend members or traders that I coach and work with that they do not trade live until they're consistently profitable in a simulator. Why would you trade on a real account until you're consistently profitable? The only real reason is FOMO, fear of missing out. But what actually happens is they're hardwiring bad habits, and when you blow your account once or twice by doing silly things, the psychological damage, it's incredible. It's very hard to get over. Then you become hesitant in taking the trades, etc. So realistically, in under 7 months, 8 months, you can have a full-time income day trading if you approach it correctly, which is slowly catch your monkeys. Start on a simulator, go to a micro. Now on the simulator, you're very confident and you've got the financial means. Well then, yes, jump up to one contract and start from there. Now what this means is I can have a maximum stop loss of 16 ticks. Okay, if I'm staying, and so this is the rule I don't think I'd mentioned. We never ever risk more than 2%. I have a max risk rule per trade of 1%, so I'm typically 0.5 to 1. It means a lower rate of return on my equity. However, it also makes trading a lot easier. But this is a really good spot to start. But if you break these rules, traders, this is where it's going to put you back, and it's just devastating to your financial account. It really is. So what we're now going to do, I'm going to pull up the recording. Now it goes for 18 minutes and I'm going to give you commentary. There's no sound on this one, so I'll give you commentary as I go through it and just explain exactly what I was thinking, as much as I can remember. At the time, it was 3 or 4 days ago I recorded this session, but some of the critical things here, and these are really easy to learn, they're very much rules based, that is, and you've got indicators that plot these automatically and they're free. That's a great thing about it, is where are your pivot levels? And if you don't understand what these are, don't worry about it, they're easy to learn. Okay, so where are our pivot levels? Our prior days open, high, low and close levels. Major EMAs, very important. As you will see, they'll make you a lot of money when you know how to trade those. Your intraday swing highs and lows, why? They become price magnets, and your current open, high, low, open, high and low. So let me pull this up. So let me hit record. Let me hit play here. And so this is a 4 tick on the NQ. Now if you're not familiar with the NQ, it is $5 a tick. What it actually means is, traders, that see these from the bottom of the candle to the top. Okay, these are actually called Renko bricks. Okay, Renko in Japanese means bricks, but each step, so you're sort of stepping down, that each step is worth $10. Okay, so each step down or up is $10. Now what I'm after typically is 6 to 7 steps. So you go and get 7 steps, that's $70. You get 6 steps, that's $60 per contract. And typically when I enter a trade, if I'm using a buy stop or what we call a limit order, I like to have my stop 1 tick below or 1 tick above, except in a runaway market, which is a bit beyond today's session to talk about. So let me hit record. Let me hit play. Once again, my videos are raw, real and unedited. Okay, so I've now hit play. So I've entered this particular trade here, and this is what I call as a bet the farm trade. So I think I might type some commentary on there. Now what I actually just did then was, when I entered the trade, I'm using an order on my matrix, so it's automatically set when I enter. I've got an automatic stop loss and target. You could see there I just increased my target, but I needed to increase my stop loss there by 1 tick. So I'll manage the trades. Now the reason I just increase my target, so automatically in my ATM I've got a target of 7 steps. So if I shorted there, I'd be after 7. If I shorted there, I'd be after 7 steps. And as you can see, there's probably 8 to 10 steps, might be 15 to 20 there. And where you'll see me increase the target is if I've got, say, a pivot in front of me, and I've forgotten what I've typed on these charts. So there we go. So there I'm targeting the pivot. So I'll pretty much do that each and every time. Now see that down here, this is a 200 EMA, and you can see we bounced off it, we've bounced off it again. And what you'll discover is that there are certain EMAs that we bounce off every day, pivots. And see that green line, that's the high of day. All of these become what we call price magnets, a major support resistance levels. Now in taking this trade, I'll usually front run, and what that means is I'll get out a couple of ticks before usually the pivot. Now with this one I could have actually increased that, even gone up and front run that high up there. Now what just happened then, once I hit 5 steps, I automatically go to break even. Now the challenge with that at 5 steps, sometimes it'll come back and stop you out and then continue. So if I've got so it protects you if you've got a sort of a trade that may not be an 80-90%, but if I know I'm in a really high probability area, or I've got a really high probability trade, what I'll actually do is pull my stop loss back down. So there I've hit my target. So stop loss traders means, sorry, my entry price, so I'll go to break even, that's my entry price, plus a couple of ticks. This is what I really should have done up here, is entered this trade, increased my target up to the high of day, but instead I got out here. Now just here I've got an order pending, so I've got a pending order here to go short. Okay, and there's some rules that I work with, and if I remember correctly, I didn't actually get filled on this one. Now for members watching this is a 1DA, and you can see I was 1 tick from being stopped into that trade, into this particular trade. Now this is actually a counter trend trade, which is a trade that I really recommend new traders do not counter trend trade at all. Okay, when you first start trading, you want to be trading, just remember the term, see the gold EMA, follow the gold. Okay, you had a short there, you had a short there, but if you shorted there, what's in front of you? A 200 EMA, so you get ready for a bounce. Now this is what we call a 2D, and I've got means I've got divergences on 2 different time frames. So I've come up with a formula. So I've been day trading now for 28 years, and I've come up with a formula which works an absolute treat on where to have your the settings to use on an entry chart, on an anchor chart 1 and an anchor chart 2, and they all work hand in hand. And so when you've got divergence on a number of time frames, that can really dramatically improve the probabilities of your trade. Now in fact, I remember this, I actually should have increased my target, and for members watching this, the reason being I had divergence on the anchor chart 2. What does that mean? A deeper pullback. So normally traders, and you can see there we just went to break even. Okay, so automatically my target went to break even, and usually I will get out here at the 89 EMA. Okay, and the reason being we'll quite often get a bounce. Now these blue lines, by the way, these are what we call pivot levels. So will I get a bounce? I can't remember now, but generally Here's my target just below, and if I think it's stalled, what I'll do then is just pull it up and get out. So we'll just see what happens here in a moment. You can see there that this is very high probability because of a 2DA, and as I mentioned, I should have increased that down to the pivot and down over 200, and so that was a bit of a mistake I made here. And this is when I will go for a much larger target than say just going for what I call 7 steps. This is what you got to watch too. You can see here I've hit my target, but I'm still not filled. That is, I haven't got my my trade's not covered yet. So fingers crossed. And what I've done here, so here I'm now filled, and my point there was that major divergence on the anchor chart too, I should have gone for a larger target. Okay, so just down here, for members watching this, we've got a potential 3B. Here we are. I typed it in. I couldn't even remember typing it in. So that is a potential 3B, which means 3 bounces. So we'll just see what happens just here, and I might even just fast forward this. And it didn't come off. There was no reason. And if I remember correctly, this is where I had a losing trade. Now it may look like here, and so I entered this trade and I was stopped on this almost immediately. Now it's a very deep pullback, and the reason I still took this trade is I had some divergence, and on the anchor chart, so we're still trending nicely. So I entered this trade, but I do remember I did get hammered on this one. I shouldn't say hammered, I got stopped on it very quickly. But you can see here these steeper pullbacks quite often, provided your higher time frames trending, you can do really well on those. In fact, if you want to go for a larger target, now's the time to do that. Okay, and that's coming down in a moment, and you'll see I get stopped. Now the safer form of trading is, see the arrows just there, that's called a T20, is to follow the direction of the gold when it's rolled over. Now there I then entered another trade just there. Now in this one I was in a wee bit late. Now this is on the higher time frame. This is what we call an 89 EMA break, and so I'm targeting the higher time frame EMAs. It's a really simple concept once you see it in real life and how it works, but you get to target major EMAs on your entry chart, but also on your higher time frames, and it works an absolute treat. And the reason being, yes, there's a lot of traders trading this time frame, but there are also traders trading higher time frames, and you'll soon discover they become it becomes a very self-fulfilling prophecy. Okay, because so many traders will trade. Now see this down here, so generally speaking, we'll come down once again. I'll front run down here and probably take a trade off that. I think I take a trade off that if I remember correctly, but we shall see in a moment. So nice little trade here coming down. Now I'm not willing to give anything away if I remember correctly. No, I'd already gone to break even, and there I stopped out. Stopped out with a nice profit. Got to be careful when I say stopped out. You can stop out with a profit as well. Now just here, if I remember correctly, I actually had a trade not long after here, and I was in actually quite late. See where my stop loss is? See that there? I should have been in down here, but I was in this particular trade quite late. Now this is now a very deep pullback, and see up here, these are called EMA. See how they're now starting to trend down. We're now in a downtrend. So what that would usually mean is these will become targets, and will usually bounce off those. So see the cyan line, what's the direction? See the gold line, what's the direction? Follow the gold. So we're in an uptrend here. I'm now at break even. If I remember correctly, I can't remember when we got out. Now this can be a challenge because we go to break even, locked in a little more, but I'm expecting, and I'm now out of that trade there, but we see this every day. You can see there, almost hit that, and now we're in a downtrend. Now I actually went short here, took a bit of heat. As you can see there, I took some heat on this one. I was in here very late again. Okay, so my stop, I moved my stop to one tick above the swing. So remember, I like to have the swings. Now here we're in a nice downtrend, but just be aware what's down below. Okay, so down below, when we come down and we hit this major EMA from a higher time frame, what do we then expect? A bounce. Now once we break through this level, it's okay, but just remember, when we keep coming down, you'll usually get one bounce after another. And let me just fast forward this a bit here. And that's the data box. So I'll usually be looking at that, where to place stops and things like that, the high and low of candles. And here I've pulled up the anchor chart one. Now this is this is good, I'd forgotten about this. This is the anchor chart one. So I'm looking at what the anchor chart one, what's our trend direction of the higher time frame. Okay, so I'm regularly checking. Now I've got 6 screens, so it makes it easy. So I must have pulled that up to give you an example of what it looked like. So here I'm locking something in, locking some profit in, and the reason being, what usually will happen here, we'll get a reversal. Okay, nearly always you'll get a reversal. So we'll see how much I lock in down here. I can't remember. If I remember, we went to break even. I think I didn't here. What have I done with my target? And once again, when you're trading live, it's sometimes you think, will I squeeze a bit more out? Will I get my pull down? So remember, I go to my entry price and lock in enough ticks to cover the commissions, and there I'm out. Where really I just picked up, I can't remember how many ticks. It would have been basically a break even. Now this is now interesting because I've now got a big, it's called a big picture double bottom here. And what I'll usually do, and I can't remember if I traded here or not, but I'll usually take a trade up to this, and I did too. So here I've put an order in up to that level, and I got damn slippage here for some reason. I think I must have been half asleep there. I was in late, and usually I'll target just up here somewhere. Okay, so let's just see what happens just here. Now these are, this one and this one, these are counter trend trades. So if you're trading with the trend, you would have been in this one here and this one here and this one here. They're a lot safer for a new trader. Remember, you only need 3 to 4 of these a day, and you've hit your 200 a day if you're trading after hours. Now the after hours market, what we call the Globex market, opens at 6 p.m. Eastern Standard Time, and so you can trade the 4 tick that I'm showing you here from 6 p.m. Eastern Standard Time right up to usually about 3 a.m. Central, 4 a.m. Eastern, when then you've got to increase your time frame. Now just here, this here almost certainly, so I've got my, just here, usually this would mean I'm in a trade here. So here I'm going for it, seeing whether I can get a larger target. I can't remember what happens here, we'll see in a moment, but almost certainly I'll get another short up here. And for members watching this, if I get a short up here, I can't remember here, but it'll be what we call a 3B short. Okay, so let me just scroll along here to save a bit of time. Okay, so there I got out of it. Oh no, still not out of it, but I am hitting the 200, and so that usually means traders that will get a bounce. Very high probability I'll get a reversal. Now if I take this trade, and I think this is where I did enter again, guess where I'd be targeting again? The major EMA down here. And so I'm out of that trade. Basically only picked up a couple of ticks out of that one, and I would then, I guess I'd take it. Oh, well, here it is here. I've got my order in here, and when I enter it, I'll put my stop loss one tick above, and I'm targeting for lower here again. Now see how I'm on the other side of a major EMA. What you can actually do here is leave your target on the other side, but just make sure you're at break even as you come down, okay? Because once again, very good chance when we come down here we'll get another bounce to the long side. Now we are making some, well, lower highs. There's a good chance, whoops, that wasn't me moving that list here. Well now and here I'm stopped out of it. So here I went to break even at that level. Why? Because of that. Now here, what I was about to say is we're making lower highs, and there's another lower low, so there's a good chance then we'll break to the short side. Now let me just go back to that for a moment and just pause right there for you. So that was 8 trades, 1 loss, 1 break even, 6 wins. So that was in 55 minutes. Now as I mentioned, initially you want to is really focus on the trend trades. Okay, that's what we call a 21B. That's probably a 3B. That's a 3B there as well. And going back on the other side, in fact, if I pull this up just here, okay, they were walk in the park trades, but just there, see that there, that's what we call a T20. That's a T20 just there, and you would have had a T20 just on the other side here. So initially you focus, and that there is a trend trade as well. But whenever we sell in the major EMAs, we're expecting a bounce. So traders, this is not rocket science. It really comes down to learn. All of these are patterns, by the everything I'm doing here. You may have noticed, oh, when I hit this, I'm expecting a bounce. It's a bit like chess, because with chess we're wondering what our opponent will do, the market will do. That is it going to go sideways, going to go short, going to go long? So we're sort of anticipating, but we know with a high degree of certainty where we're going to bounce because of the type of levels and the patterns that we actually trade. So traders, I've covered a lot in this 32-minute session. Come and join me. Let me teach you how to day trade. You can get my entire program. You've got lifetime access for $197, and that includes 8 2-hour sessions. If you can't attend the live sessions, I do record them, so you can watch the recordings. You can send in emails, questions, where I'll cover those in the sessions. So we have Q&A sessions usually where members, I'm answering emails in each session. So traders, come and join me. I love day trading. I hope you enjoyed this session. See you in the next video. Thanks traders.